All right. Today I got sent a seller financing deal, so I'm just going to talk you guys through it. So this is 3540 Farwood Drive, Montgomery, Alabama, 36109. Is a 3-bed, 2-bath. So when I looked at these photos, it's just closed about 5 months ago, and I guess the seller's selling a seller financing, probably because of whatever reason, but they're selling a seller financing with a 30 grand entry fee. I mean, the home looks okay. I mean, you could probably redo it. Some of the flooring doesn't look that great. You're hoping the roof is holding up well. Not like the ugliest home, but $150,000. I'm not sure if that's high or low, but when I go to affordablehousing.com and I go into the owner section and I put in the 3-bedroom count after I put in the address, the average rent for a 3-bedroom in this area is $1,004. Now, this property is supposedly getting $1,250 from a tenant in place, which is good, right? If you can see the lease, et cetera, blah, 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 that'll be good. Assuming that there's no issues with a tenant and the tenant isn't a tenant from a nightmare, then you might be okay. So the asking price is $158,410. The seller wants $20,000 to the seller, $10,000 assignment fee. That's what I'm guessing. So I'm assuming that the balance of the amount that's being financed is equals to my purchase price minus my down payment, and that's how much I'm financing at a 5% interest rate. And the seller is financing this over 50 years. So the seller is acting as the bank here, right? They're trying to decrease the monthly payment, but they're saying, hey, I will amortize over 50 years, but I want the entire balloon due to me in 5 years. So they're banking on that there's probably not much more appreciation in this market for the next 5 years, because otherwise that's why they're selling it, right? They want to maximize their gains. And in 5 years from now, mostly what your payments have been comprised of is interest payments, right? So you got to think about it from that perspective, right? You're not really paying down any principal over 5 years, especially on a 50-year amortization. Now, for this property, after looking at the photos, I kind of just went in here and put in some renovations, because I'm assuming when the tenant moves out or whenever the balance is due, I probably do some renovations if they ever move out, which means that I'm going to paint the house at about $3 a square foot for the entire home and $8 a square foot for any LVP. So I'm assuming I probably replace the flooring in about half the home. It might look okay from the photos, but what if there's some rotten floors or soft subfloors and issues like that? I got $1,500 for the roof in case I need to do any patching there. I got $500 for the landscaping. So that just adds up to about a $17,000 rehab. That's my personal opinion, right? You could say it's rent ready, you don't need to do much, but I would want my home to look a little bit better, to be honest with you. At $1,250 rent, then going to my taxes, they disclosed to me that the total PIT is about $733. So I took the $733 and I subtracted the principal and interest portion of the subject to loan. This gives me $100 for supposedly my insurance and my taxes. That seems really low to me. $104. I mean, I could probably add another extra $100 because I know that for my home in Birmingham, it's like $1,000 per year for property taxes, and I'm paying at least about another $1,000 per year in insurance. So this probably needs at least another $100 of expenses. So when I put in 10% of my maintenance, right, so that 10% of my rent is set aside for maintenance, repairs every single month, because I know I'm going to replace that roof sometime. I know I'm going to replace that HVAC sometime, not just all the cosmetic superficial stuff, but about the true plumbing, toilets, electrical hardware, all that stuff. All that stuff matters. 10% is set aside for property management, 5% set aside for vacancy. This is going to give me a total of $104.50. Now, if I rent this out as a 3-bedroom for $1,250, I will be cash flowing $105 a month, and that is a 2.4% return, assuming you bought this property for $158,410 for a $17,000, 17.7K rehab with a $30,000 entry fee and a 5% interest rate on the seller finance note. Now, is this a deal? I don't love it, to be honest with you, because one, it's not like a tip-top condition. $150,000, there's not much forced appreciation you can do. Again, not investment advice. I'm not soliciting any investments on this call. But then when I put in $1,250, I mean, that's well above the market rents. That means I don't really have room to increase rents even next year, in my opinion. If there's a Section 8 tenant, they're going to look at comparable rental properties around it. And if they're looking at comparable properties, they might even say, hey, we need to decrease your rents. That seems a little risky for me. But at 2.4%, that's not exactly my target return. I mean, for 2.4% return, I might as well just go buy a 10-year treasury bond yield, which is yielding about 3.7 to 4% over the last couple of weeks. So for me, that's not a deal. I don't see that much upside. The great part is that you have a 50-year amortization. However, it's due in 5 years. So in 5 years, do you think rents will continue to go up a lot and that will allow you to refinance into 30-year amortization? I'm not sure. If you turn this into a 7% in 5 years from now, and now you're amortizing over 30 years, well, all of a sudden, with this, you got to add another $100 right here. Now you're a negative percent just over there. That's right. So not a deal for me. But again, I hope you guys are able to get a copy of the spreadsheet. All right. You guys are interested in copying my homework, analyzing the same deals I analyzed. I just talked out a lot about the terms because I realized those terms. So if you guys want to copy the spreadsheet, go to affordablehousing.io, put in your name, your email, your phone number. That's the fastest way for you to get a copy of the spreadsheet. And this is how we're going to go and put up and get the reps in, get the practice in, and truly learn how to analyze a deal, even if it's a creative finance. Sometimes when you see creative finance deals, 50-year amortization to sound really good. And it might be a good, right? Especially if you're looking for a primary residence to live in. But as a rental property for Section 8, I just thought that there was too much risk from one, not much upside on the cash and cash return. And also, it seems like the comparable rents in the area were actually a lot lower than what this tenant is getting. So if this tenant were to ever move, there's probably a very, very low chance of me filling out a tenant at $1,250. Not sure, just speculating, but at a high level, that's how I decide quickly that it's not worth my time. All right. Have an amazing Friday, everybody. Hope you all spend some quiet time with your family and friends today, and I'll see you all tomorrow for day 385. Have a good one, everybody.